Raising capital. For so many founders, it feels like this high-stakes game of numbers and pitch decks. But what if we've been looking at it all wrong? What if it's less about a transaction and way more about a philosophy? A way of planting seeds for a future that doesn't even exist yet. Let's totally reframe this whole thing. So, let's just start with the biggest question of all. When you're out there pouring your heart into your vision, what are you actually doing? Is it just about getting some cash to keep the lights on? Or is there something much, much deeper going on here? And this is the core idea that changes everything. This one sentence completely reframes the entire process. See, raising capital isn't a reward for what you've already done. It's a loan against a future you're promising to build. This whole idea of borrowing from the future is just so powerful because it shifts the entire dynamic. An investor isn't just buying your current metrics or your traction. Nope. They're buying into a story of what could be. They are placing a bet on a chapter that you haven't even written yet. And this isn't just some abstract concept. The source author grounds this in a really personal story of struggle. He talks about this venture back in 2018 that was just way ahead of its time. They ran themselves into the ground, but the market just wasn't ready. And the big takeaway wasn't about timing or tech. It was that fundraising, at its core, is a contract built on trust, especially when the road ahead is anything but certain. So, okay, if you're borrowing from the future, what currency are you using? It's not dollars, it's not yen, it's not crypto. The currency you're actually dealing in is trust. And that becomes the most critical asset you have, period. Beyond all the spreadsheets and the financial models, this is what the really smart investors are trying to figure out. Can this team actually pull this off? Do we see the world in the same way? And maybe, just maybe the most important question of all, do they have the character and the discipline not to break this fragile trust we're placing in them? And this right here highlights a crucial difference between the two types of partners you might bring on. You've got the tactical investor, who's focused purely on the return. How will you make money? But then you have the philosophical investor, and that's the one you really want, who's asking a much bigger question. They're investing in a vision, not just a business model. This brings the idea of trust right down to the most personal level imaginable. Think about your very first funding round. That money usually comes from people who have known you for years. They are not betting on your financial projections, they are betting on your character. Their investment is just this profound statement of faith in you as a human being. Okay, so you did it. You earned that trust, you secured the funding, the money's in the bank, and now you face a critical choice. Because capital isn't just one thing, it actually has two very, very different faces. And this table just captures that duality perfectly. On one hand, capital can be short-term fuel. Think of it like a firework. It's dazzling, it's explosive, but it's gone in a flash. On the other hand, it can be a conviction-driven foundation. This is more like the roots of a giant tree. It's slow, it's unseen growth, but it provides the stability to weather any storm that comes your way. And listen, the point isn't about good money or bad money. You might need both kinds at different times. Tactical fuel gives you speed, foundational capital gives you endurance. The real question is about your intention. What is your philosophy for how you're going to use it? This forces us to really reevaluate what you're even buying when you raise money. It's not just about the number on the wire transfer. It's something so much more valuable. This is it. This is the whole ballgame. The ultimate asset you're buying is time. It's the runway you need to find that elusive product market fit. It's the space to build genuine, lasting relationships with your customers. It's the margin you secure to turn that vision from the future into a present-day reality. So how do you make this practical? Well, the source material offers this fantastic mental model inspired by the movie About Time. Imagine you live each day just crushed by stress and urgency. Now, imagine you get to live that same day again, but this time with a sense of calm, of perspective. Well, you can't actually do that, but you can bring that second-time perspective to your decisions from day one. You use the time that capital buys you to act with deliberation, not desperation. Here's another really powerful way to think about this. See capital as blood. It is absolutely essential for survival. Without it, the organization dies. But blood isn't the purpose of life, is it? Its job is just to sustain the body, so the body can go out and fulfill its actual purpose. And just like blood, the quality of your capital really, really matters. Healthy capital, it flows smoothly, it quietly strengthens every part of the business. But unhealthy capital, maybe too much of it, too soon, or from the wrong partners, that can be toxic. It can literally corrode your culture, create bloat, and distort the very mission you set out to achieve in the first place. Which brings us to probably the biggest misconception in this entire fundraising process. It's about what that moment of success, of finally closing the round, what that actually represents. After all those months of grinding, the stress, the endless pitches, closing that deal is not the goal. It's the starting line. The second that money hits your account is the moment all your promises become debts that you owe to the future. The race you were running was just a sprint to get to the beginning of the real event, the marathon, of building a sustainable, trustworthy, and meaningful company. The hard work doesn't end. It just transforms into something else entirely. And that leaves us with this final critical question. The philosophy of raising capital, when you boil it all down, isn't really about the money. It's about the people. The most important decision isn't how you'll spend the capital, but who you choose to bring along with you on that long, long marathon to build the future you promised. And that is the choice that truly matters.